So hi guys, welcome to another video on this channel. So in this video we'll be doing top-down analysis. So I'll be using boom 500 for this demonstration, and this demonstration can also work for currency pairs. This is a strategy I primarily use for currency pairs. So let's take a look at this. So as you can see on the screen here, we have a downtrend market. That means a market that is, the order flow is bearish. So we can see that the market is creating lower highs with a lower low here, a lower high here, a lower low here, and this lower low, lower high. So if you want to mark your structure, what you primarily want to do is look for the best zones to mark. You should not be marking this type of zones as your lower high, lower low, lower high, lower low, because you will get liquidated in the market. So how should we mark our zones? So I will show you how to choose the best of your zones. So guys, this video, you can what I want to show you here, you can use it in both currencies and in synthetics, because this example will be showing you here, you see that it works for synthetics and it also works for currency pairs, because this is a strategy I'm using to trade currency pairs. So first of all, from this point, let's start from here. After this lower high here, what we can see is we have this leg down, this impulsive leg down. Then you can see here that we have a retracement. You have this minor retracement. So when price starts the correction, what we are looking for is for price to take out the first retracement. Once price takes out the first retracement, then we can now start looking for a sell. So if you are choosing any POI, you should be choosing the POI above this first retracement. So this first retracement here is known as our inducement. So as you can see here, this is our level of inducement. This is our level of inducement here. So after that price came up and tapped into this other block. Price came and tapped into this other block here immediately, and price sold off. So after price sold off from here, coming down, price will created minor lower lows and lower highs. So the first retracement here, the first retracement on this leg from here to here will be here. So once price takes out this retracement here, now this break of structure here becomes valid. This break of structure here becomes valid. So for this break of structure here to be valid, first price need to take out an inducement before creating this break of structure for it to be valid. Then after price takes out the break of structure, price must create an inducement and takes it out before this low is confirmed valid. So after that now what we can start looking for is a sell point of interest within this leg after taking out the primary inducement. So after taking out this, you can also see that we have another level here. This level here is regarded as our level of liquidity. So if let's say if you are confused which level is your level of liquidity, all you need to do is pull up a Fibonacci retracement tool. You draw it and make sure that the point of interest you are picking after a break of structure is at least, if it's for a sell, it should be at a premium zone. So you can see that from here, price finally reacted from this zone here. Price reacted from this zone here, which is at premium pricing. Let me just show you. So you can see that this level corresponds with our 0. It's above our 0.5, so it's above our 0.5 zone here, so it's at the premium zone. So that's why price did not react from this one, because this one is still at a discount, so you cannot be looking to sell at a discount zone. So after price reacted from this zone, price sold down, then finally creating this break of structure here. Price created this break of structure here, and after creating this break of structure, what was left is for the break of structure to be confirmed. So we can see that from here, well, let's not consider this as, because it's not really that clean. So let's consider this one. You can see that this was the last candle down, then this other candle took out this candle size. So this is our point of inducement here. This is our point of inducement. So after this inducement was taken, what we can see is our nearest supply zone or other block that we are looking to sell from was here. That will be the primary zone that we are looking to sell. But when price got here, you never saw any confirmation. So though we never saw a confirmation, we had in mind that this zone, we had in mind this was our strong high. This was our strong lower high in this case. So we had in mind that price should not break and close above this zone. So when price broke through the zone with this candle, what we will primarily be looking for is for price not to close above this zone, because if price happens to close above this zone, then this market structure now becomes bullish. But fortunately, price did not close above the zone. Price just wicked through this zone, so this is not considered a break of structure or a change of character in this case. So after price did that, now what we are looking for, we'll primarily be looking for another opportunity to sell something, maybe a single candle order block, which you can see is the case here. So we'll be looking to sell after price confirms this single candle order block. So after this here, what we can see is there was another break of structure right down here. So at this point, I don't think this break of structure here has been confirmed yet. This break of structure here has not been confirmed because we cannot see any inducement here. So you should not be planning to sell from here, because this break of structure, you cannot see that no inducement has been taken out yet. So this zone might act as our inducement, which basically we see happening right over here. So this zone acted as our inducement since there was no we never had inducement taken out, so this break of structure was not confirmed. This break of structure wasn't confirmed, so this was our level of inducement here that needed to be taken out first. So when this level of inducement was taken out, you see that price reacted from this, then finally going above this other zone here. So after that break of structure, what we can see is there was an immediate break of structure and a continuation of the trend. So what happened here, guys, is price finally took out this low. Price finally took out this low, creating this inducement here, creating this inducement over here. So when price took out this low, now since this zone acted as our inducement, this break of structure here was validated. This break of structure here was validated, and when price finally broke through that break of structure, it created this inducement here. So finally price pull above the inducement, validating that this is our lower low, So after price pull above, it push up to a level of, it push up below this liquidity here, then finally it dropped off. When price dropped off, it created another break of structure. This is a valid break of structure here. Why do I say this is a valid break of structure here? First, price push below this low. Secondly, after pushing below this low, price created inducement here. This is our inducement. Consider this pullback is valid. So this is our inducement here. So after this inducement now, after price created this inducement, price pulled above the inducement, taking this inducement, so confirming that this is our low, here. So price then pushed below almost exactly to this low, creating this liquidity here, then before price finally push up, taking out this and creating a change of characters here. So guys, if you have not subscribed to this channel, consider subscribing and like the videos. Leave a comment on what you want us to cover next. So that's all I have for you today, guys. Stay safe, have a good trading weekend with synthetic indices. So this strategy, you can also use it for currency pairs, because this is a strategy I use for currency pairs. Have a nice weekend, guys. God bless you all.